So more variances, yay. This time we're gonna look at the variances we did in the last chapter, chapter 16. So we're still gonna have price variances and we're still gonna have efficiency variances, but this time we're gonna break the efficiency variances down into our mix and yield variances. So we have, when you can break it down into mix and yield, you have at least two types of material or two types of labor. They both work the same way, labor and materials, so I'm only going to work with one problem that has labor, but you would set it up the same for materials. So we have 1732, and it works A and B concurrently. It asks us to compute labor, price, and efficiency variances, and then compute for part A, and for part B, compute labor, mix, and yield variances, but then in the solutions manual, it sets it all up together. So that's how I'm gonna set it up. But we've got Matt's Eat and Run, which has two categories of direct labor, unskilled, which costs $10 per hour, and skilled, which costs $20 per hour. Management has established standards per equivalent friendly meal, which is a typical meal consisting of a hamburger, a drink, and French fries. And we have our standards here. Skilled labor is 2 minutes per equivalent meal. Unskilled labor is 6 minutes per equivalent meal. So it tells us during the year they sold 180,000 equivalent friendly meals and incurred the following labor cost. So for skilled labor, it was 6,000 hours at 125,000. Unskilled labor, they had 15,000 hours at 240,000. And like I said, then it asks us labor, price, and efficiency variances, and labor, mix, and yield, and we'll set it all up as one problem. So if you remember from chapter 16, and if you're following along in the book, this pertains to what's on page, I can't read my handwriting, but it starts on page 720, okay? So 720 to question mark. I can't read the last page. It's like maybe it's 722. All right, so we still have our actual, and then we have our standard price times our actual quantity. And that's going to give us still the difference between these two is our price variance. Nothing changes there. The variance we're breaking down is going to be our efficiency variance. So we still have over here our flexible production budget, which remember is our standard price times our standard quantity. And the difference between these two is going to be our efficiency variance. And we have here standard price times what they call ASQ, which what ASQ is, let me see if I can try to explain this, the amount we should have used based on the total hours we used here, since we're talking about labor, the amount that should have been, for example, if we're doing skilled, should have been skilled. When we're doing unskilled, should have been unskilled labor. So let's take a look here. So far, we'll start with skilled. Oh, I'm sorry, I didn't talk about the differences between this. So the difference between this and this is our mix variance. The difference between the standard price and ASQ and the flexible budget is our yield variance. So our actual cost, which it gives us, so nothing to compute there, for our skilled labor, we'll do skilled first, is 125,000, and then our standard price times our actual quantity, $20 there is our standard price for skilled, Our actual quantity, it told us, was 6,000 hours. So that's gonna give us 120,000, which we can tell this is more, it's $5,000 more, so our price variance, $5,000, and since our actual was more, it is unfavorable. Now, to do the next part, to get our SP times our ASQ, so what we do here is our standard price, we still know, is $20. And then, if you look, for each meal we make, we have 2 minutes of skilled labor, 6 minutes of unskilled labor. So it takes a total of 8 minutes for each meal of labor. And of that labor, 2 minutes is skilled. So 1/4 of each meal should be skilled labor. So we're gonna take times 0.25, okay, times 21,000. So where does the 21,000 come from? That's our total hours. So we had skilled labor of 6,000, unskilled labor of 15,000. If you add those up, you get 21,000 hours. Okay, so that gives us here, when you work that out, you get $20 times 5,250. So a total here of 105,000. So our mix variance here is going to be 120 minus 105, which gives us 15,000 unfavorable. Our yield is going to be 15. I didn't do this part yet. To get our flexible budget, we know we paid $20 an hour, or is our standard price, times our standard quantity. Now it gives us our standard quantity in minutes, so we have to convert it to hours. So it says for the skilled labor, 2 minutes per equivalent meal. So my book just leaves it in a fraction format, 2/60, which of course you can also reduce to 1/30, times 180,000 meals with the amount of friendly, what they call them, equivalent friendly meal. So 180,000 of those. So $20 times, you end up with $20 times 6,000 hours, so 120,000 here. So you end up with a yield variance of 15,000 favorable. So the mix variance, what that tells us is if that's unfavorable, we used more of this type of labor than we should have, okay? And then the yield tells us for the amount of hours we used, we sold more meals than we should have. So you can see, you combine these to get your efficiency variance. So your efficiency variance for skilled labor is gonna be 0, because you have this one unfavorable, this one favorable, they net out to be 0. Now, on the mix variance, we only have 2 types of labor here. So if one's unfavorable, because remember the mix means you used more of this type of labor than you should have, based on the 0.25 mix here. So that means we're gonna have used more of the other type. So if you only have 2 products and one's unfavorable, the other one has to be favorable. They can't be both unfavorable. So let's take a look at that. Unskilled, we have our actual cost that the book gives us of $240,000. We have our standard price. The unskilled only cost us $10 an hour. Our actual quantity here, it told us 15,000 hours. So we have 150,000 there. You can see our actual quite a bit higher than our standard. So 90,000 unfavorable there. To get our mix variance, take here, I've kind of got moved my efficiency variance up a little bit so it's not in the way. So my mix variance, I'm gonna have to look at my SP times my ASQ here, my $10 times, remember once again, each meal, 8 minutes. And we say of that 8 minutes, 6 minutes should be unskilled labor, 6/8, 3/4 converts to 0.75. Our total hours that we used, 21,000, the 6 plus the 15. So we end up with 10 times 15,750. So we end up with 157,500. So our mix variance, the 150,000 minus the 157.5, 7,500 favorable, okay? So we used more of the skilled labor than we should have and less of the unskilled. So our yield variance, we gotta compute our flexible budget to get that, $10 times 6/60, which of course this one, we convert to 1/10, so you could actually do 0.10 if you wanted to. So we end up with $10 times 18,000, 180,000 there. And so our yield variance for this one, 22,500 favorable. So our efficiency variance here, we combine the two favorables, so we end up with a 30,000 favorable efficiency variance. And then to get our total, basically we just add everything up. We have 365,000 here, total actual cost. If we want to get our SP, our standard price times our actual quantity, we can add our 120 plus our 150 here, 270, which 365 is on the same line, minus 270, of course, gives us a $95,000 unfavorable variance. You can also add these two to get it, so we know we have 95,000 unfavorable price variance. And then to get our mix, we have a $1,500 unfavorable and a $7,500 favorable. And of course, it's going to be unfavorable. We use more of the higher priced labor and less of the lower price than we should have. So that's the reason it's unfavorable. If you had done the opposite, it would be favorable. And we've combined these two variances. You can also look up here, add your 105,000 and your 157,500, and you'll get 262,500, which the difference between that and your 270 minus that also gives you that unfavorable variance, you'll end up with 7,500. And then to get your yield, once again, you can add these two yield variances, both of which are favorable. You can also take your 120 plus your 180, your total flexible budget is 300,000. So whether you add these two, they're both favorable, so you can add them, or you take the difference between the 262.5 and the 300,000. Of course, this is less, so we know it'll be favorable. You'll get 37.5 for your yield, favorable. And then if you combine these two or add your two efficiency variances, you had a 0 efficiency variance and a 30,000 favorable. And of course, if you combine 37,500 favorable and subtract the unfavorable, you'll also end up with 30,000 favorable. So that's mix and yield. I'm not going to work a materials one. They're set up, if you have one that's direct materials, it would be set up the exact same way. You just have the two different types of materials and then get your total. If you have any questions or need anything, let me know.